we recently bought Sandstorm Gold. It's a royalty company, so it's not a miner. It's got royalty, it's got streams, it's unleveraged, and the stock has gone from $7 to $2.50 in the past 7 months. We were involved in a prior iteration of Sandstorm. We owned Sandstorm Metals and Energies. 2 years ago, it was bought out by Gold. We learned a lot about the management team. We, even though there were mistakes made, we have an extremely high regard for the CEO, Nolan Watson. And given the price, again, we start with a $350 million market cap company. We back out $65 million in cash. We back out the assets they got from the metals and energy acquisition. We back out some other assets that we can easily quantify, and we get down to that stub value. And in that instance, that stub value is about $200 million. They'll generate $30 million in free cash flow from just collecting royalties and stream payments. So we know that we basically have this investment that ultimately is dependent on commodity prices, on gold, but we back into a stub value of about $200 million. We know at $1,200 gold, because they've already, in a stream, you're paying a predetermined price for a percentage of that production for the life of the mine. So their average cost on gold is roughly $400 an ounce. So they're just arbitraging $400 to $1,100 to $1,200, whatever it is. So at currently $1,200, they're generating $30 million. And when you back out the things that have nothing to do with the generation of that $30 million, we've got a 14% free cash flow yield, unlevered balance sheet. That's the way to own this thing.